Good morning and welcome back to Almus Market Mornings. Now, for the last couple of years, we have been speaking of major geopolitical escalations, and it seems this year is all about de escalations. Of course, it started with India Pakistan conflict in May, and now finally, after 2 years of conflict, Israel and Hamas have exchanged hostages and prisoners. President Trump took full responsibility to highlight this achievement in a beach town in Egypt, along with many other world leaders. There was a good amount of banter going on amongst these leaders as Trump praised some of them. But geopolitical de escalation did not have any impact on gold and silver, which made fresh highs. Gold is above $41, $4,100 per ounce, and silver is above $52 an ounce. And it's been ripping through all the technical targets. Morning, JK. Seems like precious metals are on a league of their own. What's your thought on this stupendous rally? Interestingly, it also comes at a time of global dollar strength.
Good morning, Swaraj. Um, yes, first on the peace treaty, it became a reality yesterday after the hostages were released, about 20 of them who have survived. And that was a good thing from a humanitarian point of view, and also from a humanitarian point of view, the stoppage of attacks on the Gaza area. That's also good. Yes, there was a hour-long speech by Trump. Various points were made. Of course, he was actually calling for broader cooperation in the region. Particularly, he was also referring to Iran to come to the table for a peace process, which is very important. Now, despite all this, questions remain about security guarantees and enforceability. Some analysts are also calling it as a fragile peace. Trump also claimed credit for stopping 8 wars, and included it in that his role in India-Pak ceasefire also, which is quite controversially, of course. Um, so perhaps one milestone in geopolitics, but then there are still skeptics about it. The other conflict which is ongoing, Russia-Ukraine conflict, is far more complicated because both sides have a very strong stand on rights over territories, and that looks very difficult to reconcile. There is less of a humanitarian issue and more of a geopolitical ambitions here. So I think this looks like it takes a much longer time to get anywhere near to a ceasefire. What we should be looking for in the meantime is if the conflict remains unresolved, whether US impose further sanctions on Russia or on others who are dealing with Russia. Meanwhile, the attacks are ongoing in the region. Yes, speaking of precious metals, I think it is unprecedented rally that we are seeing. The rally is feeding onto itself. One of the things, a few months back, the demand for gold, particularly, was mainly pinned down to central bank diversification. But since then, after it started breaking into new highs on a regular basis, the investment demand has also picked up, and it's rising at a very brisk pace. And there are also reports of shortages. All the news is still feeding onto the rally, and what we are seeing is also, what moves used to take perhaps a couple of months is happening in one session, and that's telling about the kind of rally that we are seeing. And here, of course, there is no clear-cut benchmark of valuation where they should be. It's a pure demand supply situation that is guiding the prices, and where the buyers tire out or where the sellers feel interested to book some profit is what will determine where the rally stops. Otherwise, it is still ongoing. Technicals are not really, giving any guidance in this matter. Other global issue which had haunted the markets since Friday, when Trump suggested, or rather said, that he would be imposing 100% tariff on China exports, cooled off subsequently in the weekend. And yesterday there was more reiteration of the same by Treasury Secretary as well. While he's not ruling out anything, Right now, 100% does not have to happen, is what he's saying. US has other tools as well, and also, stated US-China relationship is good, and Trump is on track to meet, Premier Xi in South Korea. That's stated by the US side as well. So if the prospect of a renewal of high tariffs still exists, of course, on October 29, when the 90-day period ends. Uh, what is also important is that this creates a bit of uncertainty even for FOMC, because in case of higher tariff possibility is there, they will have to consider that in their decisions. So that is one thing that we need to be mindful of. The most of the developments what we have just come across overnight and over the weekend have helped the stocks recover most of their losses, which were incurred on Friday, and particularly the tech sector once again led the rally. Market now looks forward to the big numbers or the big giants in the financial sector like JP Morgan, Goldman, announcing their results on Tuesday. And they will also be closely watching on how tariffs are impacting the Wall Street's largest companies. Now, another important focus will be on Jerome Powell speaking, today, and there will be one more speech in UK as well. So the markets are finely balanced between, you know, uh, sticky inflation risk that he will point out, or whether he will look at cooling growth pulse. So his tone and guidance on the path of policy will matter, at least as far as the markets are concerned. Uh, Also, while tariffs and geopolitics have been of a focus in the last few days, shutdown continues, and now it's almost entering the second week of shutdown. Secretary Besant also made a statement saying that it started to impact the economy. So while markets remain exuberant, keep going higher. I think we have to wonder when the impact on the economy will start to impact the markets as well. Dollar recovered yesterday. As I mentioned some time earlier, dollar is now more of a risk currency. If the risk assets are doing well, dollar rallies. If there is a risk off, dollar gets sold off. So what I'm saying is that a change in the dollar's inherent behavior is seen. Dollar is now less of a safe haven, more of a risk currency. A feature that we were actually associating earlier with some of the EM currencies. The UM currencies always get bought when there is a risk on, and they get sold off when there is a risk off. So that dollar is the most, actually that status is actually slightly reduced. So this more or less we have in the same range, but currencies which had lost out like EM currencies and Australian dollar commodity based currencies, they recovered yesterday, while the dollar index itself came up because of the fall in the euro and the Japanese currency, which are still haunted by the political situation in the respective countries. As far as India is concerned, Rupee made another short stint upside, uh, trading towards 88.60 from around 88.79 levels. Uh, there was market was looking at some vague news coming on the trade negotiations proceeding, news about India agreeing to buy more natural gas from US, and a reported Indian official visit to the US this week to take forward the discussions on trade agreement. And sometime back, even another official from US had visited India, and so it does look like the process of give and take or negotiations, reconciliations are going on. So at least what we can conclude is that there is a intent on both sides now to take it forward, and how this will achieve. There was a statement also, people looking at from the commerce minister saying that before the fall, the trade deal could happen. market is not buying it fully, but then there's caution about going long dollar rupee around 88, 80 levels, as I mentioned yesterday, because even the PSU banks are still very much active, but solid gains are not still on the cards. So rupee will remain in the range with a slight upward bias. If we do see any large inflow, then we can see it dip, towards 88.50 once again. We did have retail inflation data also. It came at 1.54%, which is a 99-month low, last seen in 2017. While headline remains low, the core inflation remains high at 4%, and that is something that the RBI will have to take into account, because the headline inflation is influenced by volatile food and crude oil, or rather the energy factors. So RBI will be trading cautiously when they meet in October. Perhaps no cut. In my view, December could be more probable, because by then we will have one more inflation number, and also one more Fed meeting, where if they do cut, then perhaps that can also influence our rate decision. So right now, market is in kind of a neutral position as far as the risk is concerned. Looking ahead to the traditional Diwali rally in the Indian stocks, which seems to be on the way. But whether it helps the rupee with FI flows or not, something I wait to see. Thank you.
Thank you, JK. And yeah, as we move across all this geopolitical scenarios and the peace treaties being signed, there are some things in the markets which are being driven, especially precious metals, with such a strong rally, no respite whatsoever. Um, Gold has, many narratives, including central bank diversification and investment demand. And this kind of rally is apparently even causing physical shortages, especially in silver. That's in the news, and that's causing a lot of disparity in the at least in the Indian silver prices, and even in the COMEX futures. So that's something to keep an eye out for. China-US trade war still ongoing, but there seems to be some statements being made to mellow the situation. We are seeing US stocks recover most of the losses from Friday. Tech sector leading the rally. Chair Powell will be speaking today, and in the absence of data due to government shutdown, it might be something important to look at. Indian inflation was at 1.55%, sharply lower due to the fall in food inflation. Core inflation was actually higher, so RBI might be cautious with this number and not sort of cut in October, and may wait till December. Let's see how all of this pans out. That's it from us today. Thank you for listening. We'll catch up tomorrow with the fresh round of updates.